Okay, so I wanted to record a quick video to illustrate an example of a trade where maybe you wouldn't take one, even though it was within your trade plan and within your rules, may not have just fit the criteria. This happened on Thursday, and it happened in the FTSE 100. You can see the chart on the right here. It's Z December 2014. And you can see this crossover trade that happened early on. Now, one of the things that I do in this trade plan is I take trades early on, because that's one of the places where there's likely to be a directional move quickly. And now this is has to be put in context, and the context is that there's going to be the Bank of England rate decision, which may or may not lead to an early or a late move in the build-up to the rate decision. But there's likely to be quite a lot of sideways action as well. Now this trade here, what happened is it broke down quickly, and then it created this setup on the end of the move, on the end of a little move, into the close of the prior day. You can see that red dotted line, and into the area of the 50 EMA, and it just did not seem like a good opportunity to take to me at that time, and so I left it. However, the fact that it tested back into the initial range, which you can see below the blue dotted line, and up to close to the green dotted line, the high of the session, that was actually the open of the session, but it's near the high of the session anyway. But the fact that it tested into that first little range and rejected it and gave us a setup to go short gave me some confidence in taking that short. Now it was had to be adjusted quite a bit, so adjusted around 3 points there, which is 6 ticks. It's not huge, but it's probably going to be something that may put some people off. But I felt, given the context, it was a very reasonable trade to take over the first one that happened. You can see that first one did in fact stop out. So what happens here is pretty much we get that fill, but it does chop around for quite a while, and the rest of this video is going to show you what actually happened. So you can fast forward if you don't want to wait. But we got onside a little bit early on, but it didn't really push that much further. And you can see that maybe that the origin of that closing swing around 16, I think it was, the beginning of the big green up bars on the prior session, the end of the prior session, might be a decent target. And you can see what one of the basic principles that I have in taking these trades is if you want to take a trade, get a trade with a configuration such that the money management level, and with trend jumper that's the first smaller dot after the plus. The first smaller dot is the money management levels, where you lock in a tick and the trade becomes in theory safe. So get that money management level the near side of any level. So if there's going to be supply or demand, which may be the case in this particular trade around that 16 area, 15, 16, maybe even down to 14, you want to get that money management ahead of that level, so it doesn't need to break in order to get you safe in that trade. So we can see here that it's looking a little bit lame at the moment, unfortunately, and it's not wonderful. Now the only other thing that I'd say in this trade is the stop is probably, although it's one tick above that last swing high there, probably needs to be at 31. It's sometimes, it's okay at 30.5 because it's above the 30 level and it's above the previous swing and it's inside that first opening range. But sometimes, depending on the product, you might be better to give it more than a tick or two, just to give it that room, just to push in, push into a range or into a level before turning. It depends, of course, how the market is acting as well. So sometimes a bit of discretion required in that aspect. So we can see it's still offside, it's barely penetrated 20, but it doesn't really seem to be wanting to go much higher at the minute, and it's just not a huge amount of activity, not unexpected given what news is out later in the session. And we've got a break now. We've got a decent move here coming into the money management level and coming into the full target, and that's it's got the fill for the full target. And at this point, I've decided to go with the I'm considering whether to go with the jump line 4 or the jump line 9. I'm just having a look to see where the swing levels are, if there's anything in particular that it might be targeting, whether there's anything big in the way that we might need to pay attention to. Anyway, so there's a bit of a separation between the two jump lines now, so I don't want to leave too much money on the table, let it come back too much on us, and so I'm trailing the jump line 4, and at the moment that's in around 18.5. I've left it as it is for the minute, but now you see it's just come into that 14 level and it's just taken it by a tick, so I'm prepared to move that back on the basis that it may do a 1 tick fail. Now it's broken through, but there's still quite a bit of separation, so I'm running that jump line 4 for the minute, and if it was to continue, then I'd consider reverting back to the jump line 9. Remember, this is you've got to be flexible in a sense. If you have more than a couple of positions, the demonstration here I've been running just 2 positions, but if you have more than a couple of positions, you do get that extra level of flexibility. You can run the jump line 4 and the jump line 9 if you choose. So the stop here is at 15, and it pretty much takes that just about now, I believe. Yeah, so we're out for 15 on that, and it's a pretty reasonable trade, something that didn't look great. Fortunately, it then did proceed lower, and it looked like it was a bad decision to trail the jump line 4 instead of the jump line 9, and you know, frankly, this is something that you've got to decide upon. I think that there's enough times when it saves you a few ticks that it's worth trailing the jump line 4 in the right circumstance over the jump line 9, and you'll see how far it gets here. But in fact, the ultimate stop out, although it might have run much further, it does not really warrant that extra risk of it coming back in the first place. I think it eventually stops out at 13.5. It gets right down to 8 there, but the jump line 9 only gives a stop of 13.5, and in fact, reasonably, you probably even want to trail the 14 because it's an important swing from yesterday, from the Friday's evening, afternoon session even, and possibly even that last minus upswing there at 15.5. You might have wanted to keep your stop behind there, and if you had done that, and that would have been very sensible to do, your stop would have ended up in exactly the same place. And it looks like here that it might break lower, but in the event the move falters and retraces back and stops out for, well, it would have gone all the way through all of the stops no matter where you'd had them. So I hope that you can take something out of this and understand that sometimes it's worth just questioning which trades you take and which trades you don't. Thanks for watching.